Have you ever wondered how to spot a once in a decade opportunity in the markets? What if I told you that the key to unlocking massive gains is staring you right in the face? Spot gold and the gold ETF just smashed through resistance, hitting a new all time high this week. This is the moment you've been waiting for. This breakout is the real deal, emerging from a powerful 3 year consolidation. The longer the base, the stronger the breakout, and this one is primed to explode. And this video will reveal the secret to pinpointing the perfect low risk entry points for GLD, including key pullback levels you absolutely can't afford to miss. Don't let this once in a decade opportunity pass you by. We'll guide you through the chart step by step to ensure you're ready to strike when the iron is hot. And whatever you do, don't even think about closing this video before the end, because we've got a game-changing bonus tip on setting up your stops like a pro. Miss this and you could miss out on the trade of the year. I'm Rick Petticelli, head stock analyst at Morpheus Trading Group, and I've been mastering the art of trading for over 20 years. If you're ready to ride that gold rush to the moon, be sure to like this video and subscribe to our channel for more cutting-edge market insight. All right, so let's get to the charts. As we mentioned, gold broke out, a big base breakout at that. This is the daily chart showing the recent breakout, a pretty explosive price and volume action. But I think this chart doesn't do this breakout justice. We need to go to the monthly chart with no moving averages, just price action. And that chart will speak for itself. We have the prior all-time high and the price action trying to push through that high 1, 2, 3 times. Finally pushed through that high on a closing basis towards the end of 2023. But then it has to take out these prior highs, which it did so after a few months of tight range chop in March. So that's a pretty nice breakout here. I mean, it doesn't get much better than that in terms of just a ton of energy stored up here in the past few years, and the price just busting through a big level. And so this prior high is from 2011, so over a decade worth of chop leading up to this. Let's get back to the daily charts. All right, so on the daily chart, GLD first tried to break out from this cup-like pattern here. In December, the breakout failed, pulled back, and then led to this tight consolidation prior to the big breakout here. So what we want to point out, as always with price action, is that it's a positive sign when price tightens up from left to right on the chart. And we can see that this pullback here was around 11 to 12% deep. And the last consolidation or pullback here was only, was less than around 5%, say. So we noticed the tight price action that led to the explosive breakout, which is good to see. Now, since we're swing traders, we're usually looking for lower risk entry points. We want the price action to be breaking out from tight range around the 10, 20, or 50-day EMA, and usually that's within a base breaking a downtrend line. GLD is not near a low-risk entry point currently for swing trade. However, because this is a big breakout from a 3-year base, we could take more of a longer-term position trading approach and take some size here with a wider stop, and we'll cover the stops as mentioned a little bit later in the video. But the idea here would be, if trading it like a position trade, we could buy some size now and then add on slight weakness over the next few weeks if there is any weakness. But if the price doesn't pull back in, we'll have on some size to take advantage of the move out. And usually the problem with setting a wider stop is that there isn't enough reward to justify such a wide stop. But in this case, it looks like GLD could potentially run 15, 20, 25% higher from here. So it has a ton of potential, and I think the wider stop is fine in this sort of trade. So buying some shares around the 200 level is fine. If the price action can pull back into the 10-day EMA here within the next week, that would be another spot to add some more shares. And if there's any sort of touch of the 20-day EMA within the next week or two, that would be a great spot also to add more shares. Now, if that touch of the 20 happens to be, further up after a surge to 215 and then a pullback to the 20 EMA down the road, well, then that would be a totally different trade idea, and we really wouldn't be able to apply any stop we use in this scenario to that trade. That would just be more of a swing trade off the 20. So the idea here is to buy some shares now and see if there's some pullback to the 10-day or the 8-day EMA, whatever you want to use. We use the 8-day EMA, but using the 9 or 10 is fine. It depends on what you want to do. And that's the same for the 20-day EMA. We use the EMA, but you could use the SMA or the 21 SMA or EMA. It really depends on what you like. So again, buy some now, wait for a pullback to the 8-day EMA, and if possible, maybe even a pullback to the 20 EMA. So since we're going with a position trade here, our stop placement would be, one, we don't want the price action to dip too much back into the base. That would be a failed breakout, but we do want to give it some wiggle room. So say if the price pulls back into the base and takes out this 50-day EMA, that would be a reason to cut half the position, and the other half would be below, well, the February lows here. But overall, the price action on this breakout should hold above the 20-day EMA and should not pull back into the 50, especially with the 50 below the breakout pivot, which is 193-ish. All right, let's quickly recap what we covered in this video. We discussed the incredible opportunity presented by spot gold and gold ETF GLD breaking out to a new all-time high from a powerful 3-year consolidation. We also revealed the secret to pinpointing low risk entry points for GLD, including pullback levels to the 8-day EMA and 20-day EMA. And finally, we shared a game-changing bonus tip on setting your stops like a pro to help you capitalize on this once-in-a-decade opportunity, which was to set your stop below the rising 50 EMA, which is also below the breakout pivot, to give the position trade entry room to breathe. Now, if you found this video packed with value and want to supercharge your trading, I've hand-selected 2 must-watch videos for you. Just click on the videos on your screen right now to uncover more powerful strategies and techniques we use at MTG to consistently crush the markets. Are you ready to take your trading to the next level? Don't wait another second. Head over to morpheustrading.com now and click on Stock Picks to unlock access to our exclusive Wagner Daily Pro service. You'll get our top stock picks, in-depth analysis, and actionable insights to help you trade with laser-like precision and unwavering confidence. Plus, you'll join the exclusive MTG Tribe, a community of successful traders on a common journey to success. Seize this opportunity to embark on your journey to trading success today. With the Wagner Daily Pro, you'll have everything you need to take your trading to the next level. Remember, at MTG, we believe in trading what you see, not what you think. Stay disciplined, trust the charts, and you'll be well on your way to achieving consistent profits in the market. Trade with confidence, and we'll see you in the next video.